So, good afternoon, everyone, and thank you for joining us today. My name is Jess, and I'm the Employee Support Supervisor for the ESO team. And I'll be covering some important information about the end of the financial year and any changes expected in the new year. If you have any questions during the webinar, please leave your question, your name, and your number in our chat option, and we will make sure to contact you after the webinar to address your queries or concerns. So during the webinar, we will discuss your P60 for the tax year 2023 to 24 and when you're expected to generate, tax allowances and thresholds in the tax year of 24-25, and finally, how to use a salary sacrifice pension to save on national insurance deductions. So your P60 shows the tax paid on your salary in the tax year. That's from the 6th of April to the 5th of April. It shows if you are working for an employer on the 5th of April, a P60 will generate to inform you of your earnings over the tax year, as well as the total sums paid in employee national insurance contributions. Therefore, you may use your P60 as proof of tax paid during the financial year. An employer is obligated to provide a P60 by the 31st of May, and you may wish to use this to claim back overpaid tax, apply for tax credits, or as proof of income if you apply for a loan or mortgage. For the tax year of 23-24, the P60 will be made available on your employee portal by the 31st of May. For anyone inquiring for P60 information urgently, we'd encourage you to review your final payslip of the financial year, as this contains the exact same information as a P60. At Giant, we will generate a P60 for all workers that are actively working and receiving payment on the 5th of April. This means that if your P45 was issued prior to the 5th of April, we will not generate a P60, as the P45 information will already confirm your income to date and your tax paid to date. If you believe that you are due a tax rebate, you may use the details found on the P45 to support your claim with HMRC. If you're leaving Giant, please ensure you've downloaded your P60 off of your employee portal, and this is found under the payments section and then payslips. So this year's tax changes are very minimal, as the personal tax allowances and tax thresholds have been frozen at their current levels until 2028. In the financial year of 24-25, the personal allowance will remain at 12,570, which is the tax code 1257L. This means that from your annual earnings, the standard tax-free allowance will be 12,570 annually, and earnings above this, weekly or monthly values, will attract tax at the appropriate tax percentage. In the new financial year, the basic rate tax threshold will be applied on weekly earnings up to 996.75 and monthly earnings up to 4,189.25. This means that so long as you earn below 996.75 per week, you will be taxed at only the base rate of 20% after your weekly or monthly tax allowance has been taken into account. If your employee gross amount exceeds the values mentioned already, the additional portion of your earnings will begin to fall into the higher rate, which is 40%, and the additional rate, which is 45%. In the tax year 23-24, the tax week will run from Saturday to Friday. This means that if you are paid on a Saturday and then the following Friday, your two payments will fall within the same financial week. We highlight this as a caution, called a supplementary run, and this is when you receive more than one payment in a financial period. Supplementary runs can result in increased tax on your second payment made within that financial week. For example, as the first payment receives the full benefit of any weekly tax allowances available. Therefore, please ensure all timesheets are submitted and approved on time, so payments flow in a weekly or monthly schedule. So the tax month runs from the 6th to the 5th as usual. And finally, the first payroll in the tax year will receive a 1 week, month or month tax allowance, irrespective of how many weeks or months are being paid. As an example, if you are paid on the 8th of April for 3 weeks worked in March, the tax allowances from March will not carry forward, as we would have entered a new financial year, so any allowances from the previous year would no longer apply. Please also note that tax is calculated when you are paid and not when the work is completed. So we will not need to be able to respectively apply tax allowances. This would mean that instead of receiving a 3 week tax allowance, on a standard tax code, you would be allocated only tax-free due to the position in the tax year. This may lead to slightly more tax being paid on this payment, as more of your income would be subject to taxation. However, if you're on a cumulative code, you would expect to receive an adjustment taking place as the financial year moves on. This would not be an immediate adjustment. However, taxes typically adjust in accordance to income earned to date during the financial year. So if we move on to national insurance discussions, from the 6th of January 2024, there was a change made to the calculation of employers' NI on earnings above the primary threshold and including upper earnings limit, which saw a 2% reduction from 12% to 10%. And then from the 6th of April 2024, deductions of NI will decrease again to 8%. So who is not affected by national insurance deductions? Those earning below the lower earnings limit of 9,564 a year, or that's 797 a month. Unfortunately, there are no exemptions to this levy as it is a statutory deduction, so all working persons, including state pensioners, will be required to contribute. This table confirms the most common national insurance categories, what they mean, and what employees and employers pay on their earnings per category. So these are the employee rates that you can see in this table. Currently, if you are earning above 242 per week or 967 per month, you will pay national insurance 8% for the new year, and an additional 2% on earnings above the upper earnings limit of 967 per week. So on the employer's side of things, there is a contribution of 13.8% from the assignment income, and that's the income that we receive from your agency or client when earnings are above 175 per week or 737 per month. The purpose of your national insurance is to contribute towards funds like your state benefits, which include state pension, statutory sick pay, or maternity leave, or entitlement to additional unemployment benefits. With the upcoming changes, you may wonder how you can make savings on these deductions. Any workers contributing to a salary sacrifice pension will receive the benefit of saving on national insurance contributions. A salary sacrifice scheme is an arrangement where you can give up a portion of your salary in exchange for an increased employer contribution into a pension scheme. With salary sacrifice, you effectively reduce your pre-tax salary by a proportional amount, resulting in a reduction in your PAYE tax. Also, as the salary sacrifice amount is retained prior to the calculation of employers' national insurance and the employee gross pay, you would find a reduction in both the employers' and employee national insurance contributions. In this financial year, a basic rate taxpayer can expect to see a savings of up to $460 in tax and national insurance costs by participating in salary sacrifice schemes and contributing £1,000. Whereas a higher rate taxpayer would see savings of $560 should they sacrifice £1,000 of their income. In the upcoming financial year, basic rate taxpayers can expect to increase their savings on PAYE tax and national insurance. For every £1,000 saved, they can expect to see a saving of $480, so an additional £20. Similarly, higher rate taxpayers can also expect to see an increase on tax and NI savings because for every 1,000 contributed, 580 is expected to be saved. If you wish to receive more information on salary sacrifice, please contact the ESO team via your employee portal, and you can either use the live chat function or our messaging system. Salary sacrifice is available on the Giant Premium package, and the net margin on this package is $39.50 per week. And that works out at about £20.14 after tax relief. In addition to the ability to participate in salary sacrifice, the premium package also includes useful features like Giant Advantage, which is our cashback and rewards scheme, faster response time, and private health insurance. So if you're earning over £100,000 per year, your personal allowance goes down by £1 for every £2 that your gross taxable income is above £100,000 per tax year. This means your personal allowance is zero if your gross taxable income is 125,140 or above. In these instances, anyone who earns over 100,000 should be submitting a self-assessment tax return for that tax year to see if any additional tax is owed. You can see the personal allowances set by HMRC on the government website and also rules on the self-assessment. An unexpected tax bill is not welcome by anyone, so we'd encourage you to check with HMRC. So statutory payments, there are increases across the board for these, with sick pay increasing to 116.75 per day and parental leave increasing to 184.03 per day. The government have announced there will be a change in paternity leave from the 6th of April as well. From this date, fathers will be able to take their 2 weeks of statutory paternity leave at any time within the first 52 weeks of the baby's birth. Although they will still only be entitled to 2 weeks leave, from the 6th of April, the worker will be able to split these into 2 separate weeks as opposed to 2 consecutive weeks. A new SE3 form has been published to accommodate these changes. In summary, we hope that you take the following points away with you. Your P60 will be available by the end of May. The standard tax code will remain the same at 1257L. The tax week, Saturday to Friday, and the tax month, the 6th to the 5th, as it always is. Employers' national insurance is going to remain at 13.8%. And from April 2024, national insurance deductions for employees will go down to 8%. And finally, you can make additional savings by contributing to a salary sacrifice scheme. So that does conclude our webinar for today. We hope you found this session useful. If you have any feedback or suggestions on how we can improve our services, please let us know by completing the survey after the webinar. Should you have any questions down the line, please reach out to our support team via the portal or the live chat on our website. And thank you again for joining. It was really appreciated, and I hope you have a great day.